Hey everyone, welcome back to CryptoCache. Thank you for joining me here. Hope you're having a great day. We're taking a quick look here at the crypto market overview, why the price of Bitcoin pulled back so hard and altcoins with it. It's likely based on big tech earnings. We're going to talk about that as well as CME gaps getting fully filled. But just to know, there's like over 20 in the last 24 hours, we're seeing 200,000 plus traders liquidated for $1.1 billion. Right? That is a terrible, terrible number. You should not have been part of that statistic because if you watched my video from yesterday and even the day before, I was urging caution leading into these big fundamental catalysts. So make sure that you don't trade situations like this to kind of stay safe. Congrats to our community members who did actually secure some nice profits on our Bitcoin short, 62% XRP short, 50%. You're probably scratching your head as to why, wait a minute. You told me not to trade. Why do you have profit? Those were trades we already had taken 3 days prior with the local tops, right? Bitcoin 116K, XRP at like 270, 260 to 270 range. So the concept here is that you want to be very careful trading these environments. And at this point, we want to wait for the bottom to be in before you consider some longs. And we're going to talk about that too. So be sure to stick around. We got an important one today. Let's take a look. All right, folks, before we jump into the back end juicy liquidation data, I just want to kind of quickly remind you, if you're part of our community, make sure you're taking advantage and reading the trade alerts here. I specifically explained why we took our Bitcoin short and our XRP short here recently, right? There's different things that you want to look at and pay attention to make sure you're a better trader. These are all available for you. If you're taking my trades without learning from my education, for lack of better terms, then you're doing it wrong. You're literally cutting yourself off of the legs. So just make sure you read that so you know. Also pay attention to invalidation levels because these are super important. You got to be able to learn to cut your losses early before trades trigger stop losses. Okay, so once again, that's available for you there. Quick little announcement as well. We have 2 slots left remaining for the next 24 hours for our Dumptober sale. I've got a couple people asking about it, so you may want to pull the trigger there. That is available for you on our Discord or even Telegram as well. It's also there. So let's take a quick look at the backend data and kind of just talk a little bit more about these order blocks here. And this isn't like super specific. I just like to kind of touch on it so we can kind of see really big outliers, right? So we got a large sell order at 110,000. It's kind of that large round number. But locally here, we can see a little bit more of a delta here for shorts versus longs. Obviously, that's going to be the case because we're in a downtrend, but the concept here is that we have more selling pressure than buying pressure, and those key levels so far are that 108.5 to 110K. Now, we're going to look at the larger timeframes on different perspective here with liquidation, but this is just kind of a good representation of the last 7 days for Bitcoin. We can see that liquidation is much higher to the downside. So 106.5 could very well be the next level. That's that larger outlier to the downside. And of course, 112 to the upside for the next highest point. Now, these are not exact sciences, folks. You got to keep in mind, they're just kind of giving you an indication of where people are hedged the most, where we have the most amount of liquidation, because market makers really love to sweep these areas. So that way they have less opposition in the opposite direction. We look at the last 30 days, though. This is what concerns me the most. We have way more liquidation to the downside than the upside. So get this. Somebody took a long 30 days ago and they were in profit, and now they're subject to being in the red and getting liquidated because they didn't secure profits. That's basically what this tells me. Okay, so there's too many idiots in the market right now that don't know what the heck they're doing, and they are just nonchalantly adding to the big problem here, which is liquidation and high leverage, right? So just don't be another statistic there, folks. Don't use leverage if you don't know what you're doing. Okay, it's just kind of stupid. You're gonna have some fun. You're gonna get get a couple wins, but I can tell you what, the house always takes your shorts, right? It's just the way it goes. No pun intended, but they can also take your shorts. Okay, anyways, so taking a look here at liquidation map here, last 24 hours, we can see, oof, that is big. That's what, 8-to-1 ratio for Bitcoin for longs versus shorts getting liquidated. 5-to-1 ratio for Ethereum. Solana is, whoa, it's a lot higher. That's like at least, what, 10 to 15 to 1. So we can see a lot of altcoins are getting hammered hard. And the reason why this is important to look at is it helps us understand the correlation between altcoins and Bitcoin with liquidation levels. So the more liquidation on the downside for alts, the more likely they are to bounce and recover here soon. That's the truth about it. But it's also short-term recoveries. So we can't be just naively taking longs because there's no one left to, no more liquidation left on this coin. It increases the risk tremendously, right? So we just kind of got to be mindful of that. Generally speaking, I like to wait for key levels to be held for a 24-hour period before I take a position, and we want to see if those levels hold here today, right? That's what we're going to be identifying, those macro support levels for altcoins and Bitcoin specifically. That being said, fear and greed index is still kind of in that fearish neutral standpoint there, which isn't too different. We can see ETF net outflows have been higher in the last 48-hour period. And of course, altcoin season index is tapering off again. We can see we're now under 1.5 trillion for altcoin market cap. Keep in mind that does include stablecoin, so it's not the worst thing ever, but it's still concerning where we can see a majority of altcoins have gotten hammered. Now, these are just the top 100. This excludes anything outside of that, but if you were to include that, it would be a lot worse, honestly, as far as just the performance versus Bitcoin. So that said, altcoins should be bottoming out soon because of this, but it also implies that they're probably going to continue to run now that the bottom has dropped out, at least their tentative bottoms, specifically the ones we're going to be looking at here today, okay? So that's kind of the case there. Let's go ahead and jump into the backend data here for Bitcoin. And I have the 3-month timeframes pulled up here, okay? So the center, of course, is only going to be the last 5 days of liquidation. It kind of gives us a delta of longs versus shorts. Right now, we can see there are probably close to about 20 billion in shorts versus longs. So it's not really a good sign to try to take a long into because you're going to immediately be on your back foot. You're going to be backpedaling. It's just not going to be a good trade you want to take. All that said, though, if we take a look here at open interest, we can see 111,000, 112K as a round number, 112 is that macro support and resistance zone. And what I mean by that is it works like a magnet. Okay, so when we have a lot of open interest in a specific range, the price will gravitate back towards those levels or use it as a potential support. Okay. In this case, we got to presume 112, 111,000 will be the new resistance because once more we got that macro point of control at 111. I think there's a distinct chance that we make a run towards 111. We're going to reject out, dead cat bounce, and pull back, continue downtrend by essentially honoring the descending trend line. Okay, we'll show you on the charts, of course, what that looks like, but that's not a good sign. But it does help us understand that 111 to 112 is that next level of consideration for take profit on a long, possibly a area consider shorting, just kind of some food for thought, right? And that's why it's helpful to look at. The last 3 months here, we can kind of see too as well from liquidation standpoint. Majority of the macro liquidation exists here at about 100,000 and also 90 to 91,000. Okay, so this isn't super amazing or helpful, but it does give us a perspective that we should experience if we get closer to this 105K range. It's probably more likely than not we're going to see that $100,000 range if that local low is broken. Okay, simple way to understand it though, large round numbers, 100,000, 90,000, there's always going to be liquidation levels at those large round numbers. Okay, so it's just something to be aware of. Now, when we take a look here at the 4-hour time frame for Bitcoin, we're underneath all moving averages. We've been working on a descending trend line. This is why we kept our short position open based on the simple fact that there is a lot of momentum to the downside, and you don't generally want to try to take a long against that. Now, if we look at this current trend here, or just say ever since we bottomed out on Friday at roughly 103,000, the price pulled back up to 116.4. We're now down to 107 and some change. But what I want to point out here is we have this local low that's been holding pretty well. Okay, so that's roughly 107.5. So hypothetically, our local support is 107.5. We've also got our point of control at 108K as well. So we see the most amount of support between 107.5 and 108. So that does emphasize the fact that if we were to close above 108,000 today, there's decent propensity for Bitcoin to stabilize and potentially recover from here. Now, it's best not to presume that is the case, but what you also want to do is not short into this kind of overextension and also a key level support. Now, I say it's a key level because this is a smaller time frame. It's not necessarily a macro support or resistance. We zoom out, though, we want to recognize too, and this is kind of fairly obvious, at least it was yesterday, 111,000 is that area of control right here with volume. Okay, so if we do rally back up, we break our descending trend line, everyone's like fully bullish, and then instantly we hit 111,000, what do you think is going to happen there? We're going to see some slowing pressure, some exit liquidity. The price is going to pull back at that point and likely continue lower for once more that dead cat bounce. Okay, so it's not a guarantee, of course, but those are things that usually happen on average. Same thing as well with fib levels too, right? You have that halfway point of retracement where the price action usually will consolidate and bounce. But this is a perfect example of why you should never trade using fib levels alone, because this 0.5 fib level meant nothing. Okay, so once more, trust volume and trend lines and also consistently retested levels over these fib levels, because they're going to do you a lot less harm than good, right? They're going to be good for you in the overall sense because you see more consistency there. Either way, at this point, it's far too early to say we're just going to pivot and bounce from here. Nobody really knows where we're going to go, but the local bottom, we're approaching that for the moment outside of this, obviously, that 106, 105K range. So hypothetically, we can't reclaim or close above 108K and have a short-term relief rally, then we're more likely to push down lower to that 106K. That makes a lot more sense being the local bottom. Okay, so those are my thoughts on Bitcoin. What are yours? Comment below. Let's take a look at some altcoins. All right, folks, take a quick look here at Ethereum, see kind of what's going on. We're obviously in a descending trend, so just kind of make it clear and obvious. Not really worthwhile to consider a long position. We did not bounce off this local support and resistance level. Basically, it's a psychological support or resistance at 4,000. Obviously, the price rallies back up. We can presume we're going to see some slowing pressure there, but this didn't provide a lot of support for us. So not happy about that, but that's also one of those like obvious things where you want to make sure you understand that, fib levels and extension tools, predictive indicators mean very little in these kind of environments. This was a macro play, and I already covered it earlier in the video, of course, but I think the big tech earnings essentially did that for us as well. Okay, so that's a big deal there. Now let's take a quick look here at the overall sentiment here for Ethereum. First of all, just going into the backend data first. Last 7 days, we're going to need to probably zoom out a little bit here, and you're in trouble when you have to zoom out to kind of identify some key level here for open interest and or, of course, liquidation. And we look here, 3850 to 3950 is what should have been a support level. It's our new resistance. Okay, so the uptrend, if we were to rally and recover and hit that level, we can presume that $3,900 range is going to work as a solid resistance for us. Liquidation short deltas at about 15, actually almost about 20 billion as well. Very similar with Bitcoin, right? So we're seeing that significant correction, even though we have slightly less liquidation, slightly more liquidation on Ethereum than Bitcoin. It's still a lot. Okay, it's a trend you don't want to try to just buy into. Market makers are going to pump the price to trick you into the false sense of bottoming out, but the truth is we're not there yet. Okay, we can see from a liquidation standpoint, last 7 days, there's a little bit left at 3,700. I'm more interested in the larger time frames. Let's see what the 1 month tells us. So 1 month liquidation for Ethereum, we have a pretty significant chunk between 3,600 and 3,500, upwards of about 3,650. So now that the local bottom is being retested, we got to give it a chance to hold. But hypothetically, we lose that level. I think 3,670 to 3,600 seems like a practical consideration. Let's take a look at the chart. See if there's anything else we can kind of identify here on the larger time frames. Once more, 4,300 is that point of control for us at that larger structure. But we also want to identify lower support levels too. Okay, so 4,300, yes, that's one. We are in the lower range here of control. So 3,600 to 3,800, decent consideration for averaging into your position if you're considering a long. This does require Bitcoin to remove its head from its ass, right? If that doesn't happen, I think Ethereum is going to continue to struggle. Now, we look at the local bottom here previous to this uptrend or just kind of pushing into this 3,800 plus range. We can see 3,400 is at local. Okay, so 3,400 is the macro bottom there. That's kind of a worst case for us. I'm more so leaning more towards 3,600 to 3,700 as a distinct reality here for the next leg down if Bitcoin were to continue to progress towards its 106K support range roughly. Okay. Now, those are all things that are subject to change, of course, but at this point, these are the numbers we have for the moment. And it's not pretty. No matter how you look at it, the macro structure is going to be bearish. 4 hour time frame is the same thing here as well. There's nothing really to note, that's noteworthy, letting us know that we're just going to bounce from here. You could argue this is a quadruple bottom, right? I'm sure the pattern people in the world are looking for that. But keep in mind, we're retesting this level a lot. Right? The more often you retest something, the more likely it is to break. That's why there isn't such a pattern as a quadruple bottom. Usually the third time you test something, that's supposed to be the key maker there, right? Which we saw here, the triple bottom. But when you hit a fourth or a fifth or a sixth time of retesting that support, the probability of the bottom dropping out is quite high. Okay, so just understand Ethereum is not a great place. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community, and the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. All right, let's move on to Solana, see what's going on here. Solana is pretty similar in a lot of ways. You could probably summarize the majority of the coins we're going to look at are similar in ways on the macro. So let's go and dive into the back end before we speculate. Let's take a quick look here. 195 is that area of open interest here locally, of course. I think we zoom out, it'll probably be pretty similar because I don't think there's a lot of price action below, at least too far below. So we do have 185 as a secondary. So now that we've hit that level, decent chance we do consider a bounce here, or it's a consideration for a long because of that. But I don't really like just blindly taking a long because of that one thing. When we look at liquidation delta, it's 5 billion in the red. That's actually quite high for this coin, but all liquidation has been fully swept. So if all liquidation has been hit and we're in our macro point of control, there's not a lot of downside left remaining, right? Hypothetically, that's kind of what that should tell us. But when we look at the macro here, let's go ahead and zoom out to the 1 month. There is, no, that's pretty well swept too, okay? So dang near anyone who took a long with leverage on Solana just fully got destroyed here recently. All right, so that's kind of the case now. That kind of emphasizes trading with caution and respect to the market, but also not using leverage or high leverage, right? Some people seem to think it's just kind of the way to go. Obviously, if you're the gambling type, it's a different story, but I've never been that kind of person, so it's easy for me to say. Now we take a look here at the macro structure here for Solana, just kind of giving you some perspective here. We can see our point of control once more is at 203. That's not too different than we discussed previously. We've got some support at 180. That's like our secondary, kind of like a a little lower range, 180 to 185. We got a decent amount of volume in this range. Okay, so we're not any. Solana is not unfamiliar with 180 to 185. All that said, that could be the last area of support. We lose 180, we could very well be moving into a different type of situation there altogether. But the areas that we see right now, specifically 180, 185, those are the first levels we want to kind of pay attention to and see how Bitcoin performs first. Worst case scenario, just kind of give you absolute worst. Our local bottom here is 158. Round number 160, that very well could be the continuation potential if we do lose this 177 to 180 range. Okay, so once more, just some fib levels there or some regular levels to pay attention to. If we do pull up our macro fibs from our local bottom to our local top, this would give us some perspective on potential retracement areas. Once more, they're just kind of, these are averages, folks. These mean very little, honestly, but we can see 193 was supposed to be that support level, didn't even hold. Okay, so all the more reason to distrust Elliott wave theorist and to just trust what's on the charts, which is simply trend lines, key level supports, and I would say more importantly, what's not on the charts actually with the back-end liquidation data. That's probably one of the biggest ones here because we all know that we're just little little fish in the sea here of a big, these big whales just chumming the waters, right? They're absolutely destroying people left and right, and it's because these people get destroyed that it continues to happen, right? If nobody used leverage, we wouldn't have this problem. It's just crazy. Anyways, 4-hour time frame, we can recognize here that there's not a whole heck of a lot of support in our area that we're in. We do have a secondary amount of open interest, more so point of control here based on volume at 185. So we're starting to see our local bottom. I think 185 is a better case scenario here for support. We're starting to see some tapering here effect with money flow index below the RSI, but that doesn't really help too much. MACD is still diverging, carrying momentum. So really, you want to wait for these things to kind of bottom out and stabilize before you just blindly take a trade. So once more, don't trade this coin. I'd consider waiting. 180 seems like a much better consideration than 185. But once more, 185 could be the local bottom. You never truly know. What are your thoughts? Why don't you comment below? I'd love to hear it. Let's take a look at SUI next. All right, what are we looking at here for SUI? Ew, this one is gross. Oh my gosh. Yeah, totally lost this local bottom there, 236 to 245, did not hold. We can see a solid descending trend line. Macro point of controls 245 to 250, just kind of taking the local range and then the larger range. All that said, looking here at some liquidation levels, we can see, man, this is just disgusting. 1 month, let's go ahead and do this here first. 1 month time frame, we were right there. Our local potential bottoms at 230 based on open interest. Once more, that's not really super trustworthy considering how terrible this coin is performing versus Bitcoin. We got almost $500 million in liquidation short delta. So way more shorts than longs with good reason. Because you look here, you zoom in a little bit, all the local liquidations pretty much fully swept here. So we could very well see a pivot and a bounce from here, but it's too high a risk to consider a trade because this coin is just absolute garbage right now. Not great. We look at the macro here, 1 month time frame. Jiminy Christmas, look at that. $2 is that heavy concentration, but there is just so much liquidation on the downside. Isn't it insane? Like, how can somebody still have a position open with this coin when they got in at like the $150 to $2 range? That is just nonsense to me. Anyways, the fact that you're using too much leverage is the reason why we're having these problems. So everyone stop using leverage so much and we'll probably be in better shape. Once more, that's a double-edged sword though. All right, Anyways, 4-hour time frame, there's nothing here that's telling us we're going to bottom out. Once more, our local bottom here, 227, 228, could be the case. But I'm willing to guess, based on all that liquidation that we see, that the 2 to 230 range is absolutely going to be the next step here for this coin. It's dropped off a cliff. There's really nothing here to excite me. We can see some confluence here at 190. That's the previous bottom. So just kind of some key levels here for you. 190 is that current potential support range. And then once more, 245 is that tentative resistance for us. But honestly, you're shooting you're shooting in the dark here right now if you're trying to trade this coin. That's the easy way to understand it. Don't trade, wait for Bitcoin to bottom out, and give this coin a chance to be able to find its bottom first. You're going to miss tons of opportunity because it's probably going to shoot straight up because of that. But that's just how the market is, okay? You're better off taking a trade with less profit that has a higher success rate than trying to take flip a coin right now and hope for the best. That's just not how you trade. All right, moving on to XRP. This coin's really dumped pretty well here, which once more, it's easy to be happy about that, just based on the simple fact that, once again, we secured some nice profits here on our short. We hit 3 targets at 50% for XRP. Once more, read my trade alerts if you want to know why we took that trade in the first place. It was massively overextended leading into a channel. Even though it was a bullish type of channel, Bitcoin was looking pretty bad. And when Bitcoin looks bad, XRP looks bad too in most cases. Granted, XRP has been fairly strong recently, so we got to recognize too that that pairing isn't exactly 100%. Okay, so let's see if we can identify how well or poorly this coin is performing versus Bitcoin. When we look at XRP the last 7 days, that doesn't tell us too much. We'll zoom out to the 1 month and kind of see here, we got some open interest at 220, 215. Okay, so that's that local bottom if you exclude this ridiculous candle wick from Binance. So all that said, 220 is the potential area of retracement for us as a worst case scenario. When we look here at the liquidation delta, we're at 1.5 billion. This is actually quite high. This coin generally only has, in most cases, it's only going to have somewhere in the range of about 500 million, I think. Anything over $1 billion is a lot. So this coin's getting heavily dumped on. It's not all the ridiculous people that don't know how to trade. It's more so the market makers that are pulling the price down, right? So, if you're an XRP enthusiast, awesome, good job. But I can tell you that this is one of the coins that you want to be very careful with who you follow. And there's just nonsensical people in the world that don't know a damn thing about trading that love talking about this coin, and they get really popular really fast because of it, because they're complete sellouts. Anyways, just tell me how you really feel, Cash. So XRP on the left-hand side, we can see 1 month macro liquidation, 240 to 230 is kind of like a small concentration there, but this doesn't really tell us too much. It basically tells us that most liquidation has been hit and that there's not a lot of incentive for the price to continue to much lower, just based on that sentiment. And we look at the macro here. This is in a sense here, the larger time frames. This is just the daily time frame. I want to give you some perspective here in case you missed any of my previous analysis, because we got a lot of new members coming on board. We want to double check here. We got our previous bottom at about 270, 275. That's going to be the new top for us. We got a candle wick up to like that 269 range. The price rejected there. So moving forward, if the price were to recover and just say honor its ascending trend here, which is still tentatively existing, we can see that that's going to be a solid resistance for us. So please note, XRP is not going to go to the moon anytime soon, no matter how many idiots talk about this coin. What is going to happen is a distinct probability that we see a retest of that level if Bitcoin can successfully kind of go sideways for a little while. Because this coin has proven to show that it has a lot of strength in the current range. Okay. Now, from a standpoint here of the technicals, we're under 50 on the RSI, stochastic swinging down, MACD's soon to diverge, not fully diverging. And the only thing we have positive here is the money flow index is increasing. So we're seeing more money flowing into this coin in the last 14 days than the previous period, and that's generally a favorable sign. Obviously, this outlier is no longer factoring in. So, all of that being said, the daily time frame, while it's not bullish, it's not mega bearish either. Okay, so just to kind of give you some perspective there, it's breaking bearish, but it's not quite there yet. We do have somewhat of a trend line here on the lower time frames that has been broken. So it's generally unfavorable when you break an ascending trend line. You want to be very careful in just taking longs. Okay, now a lot of times what can happen is the price can rally back to the local areas here, the local high, for example. That's an area we want to pay attention to at 253, but also the more macro high of 267. So if we do see a rally to those ranges, there's a distinct chance we see some kind of capitulation at that point. All that said, though, at this point, the local high or local resistance is 253. That's the local high. When we look at the money flow index and RSI and all this, we're seeing a pretty significant overextension. It's common for the price to bounce off of this level. Okay, so I wouldn't be surprised if we see a short-term relief rally for this coin, but based on a momentum standpoint here, this coin, you have really no business taken along with this coin. Okay, that's really what it boils down to. Pretty much the same thing can be said about every coin we looked at here today, and it's just that common theme here. When you have a significant correction with any coin, specifically Bitcoin, and altcoins respond very poorly to that, while they will recover quickly, you never truly know how far they're going to recover and how long they're going to recover for. So in this case here, why not wait for some stability? Why not wait to see how Bitcoin performs leading into the weekend to consider your next trade? Okay, those are things I like to kind of educate you on. So once more, I talk about that a lot in my Trading Academy community signals group. It's all linked down below. Just make sure you take advantage of the Dumptober sale going on. There's only 2 slots left available. Feel free to message me if you have any questions there. But I'll go ahead and shoot out some updated charts here on our Twitter, Telegram, and Discord, and we'll go from there, see what happens. But at this point, folks, no trade is best trade. Simple way to understand it. Hope you have a good rest of your day. We'll see you in the next one. Take care.